Before we get into the charts, I found a great article on the Motley Fool, Carvana. Stock, buy, sell, or hold. So we're about July time frame. Prices are up roughly 450%. Prices on Carvana are down roughly 99% still from the high though. All right, so that's the framework of what we're dealing with regards to Carvana. But the question is whether it's just a buy, sell, or a hold. And I think the article did a great job at breaking down each camp. So the buy case, management took decisive actions to slash costs, sharply reducing inventory and issuing 3 rounds of layoffs. As a result, the company's adjusted earnings before known as EBITDA approached break even, and the company surprised Wall Street by forecasting adjusted EBITDA of at least 50 million in the second quarter. Additionally, used car prices are rising, up 4.4% in both April and May, so that's good. Um, During the pandemic, when everything was going up, including used car prices, um, Carvana pretty much bought them at the peak. And then over the last couple of years, um, as everything has gone down, well, it's kind of like what happened in the bank crisis. Their loans, in this case, their cars, are worth less. So their books are worth less than what they were. Again, very similar to what happened in the bank industry in recent months. Carvana shares have been propelled this year by a short squeeze, so that's the key too. At 69% of the float was wow. 69% of the float was short as of the end of May. A sign plenty of investors are still bearish on the stock. However, if the business continues to recover, the stock could continue to pop as short sellers are forced to buy back the stock. So I'm going to say that's the reason why the stock is up 500% or 450 rather. The shorts are getting killed. They got to buy back their stock or really get killed. All right, the sell case. Carvana is trying to unburden its nearly $7 billion in debt that the company added when it acquired the ADESA wholesale auto auction business. I didn't know that. That is a great thing, though. Pending they can get through this short-term period. With a heavy debt load and about 600 million annualized interest payments based on the first quarter results, Carvana will need to generate significant operating cash flow to overcome the debt headwinds. Now, that's going to take some time. They're going to have to go back to the public markets for capital, which is going to dilute earnings per share. So that should be a headwind also for price. Carvana had never been profitable on a gap basis, as it chooses to invest in growth rather than profitability, and that's the norm with all growth companies. They're not going to make money. Most of them are not going to make money early on, and so they need that funding to grow their business to get to that economy of scales where they will start making money. All right, the hold camp. Management has shown it's capable of reining in costs, but the company is still at a mercy of used car prices and interest rates. If rates keep rising, used car prices fall, or a recession hits, Carvana could be in serious trouble. Now, we're near the end of the rate cycle in terms of increasing. Used car prices have come down, but they have bottomed, right, which is good for Carvana, which has a boatload of cars on its books. Some say we're in a recession. Some say the recession's coming. Some say we're in an expansion. So who do you believe? It's hard to say. Though the stock still has considerable upside potential, it is also more difficult for it to deliver multi-bagger gains as the share price is no longer in the single digits when its market cap was down around $1 billion. And I'm going to show you that I missed this opportunity. It was pretty much staring me in my face, but I missed it. Article rates the Carvana a hold. I would agree with that based on the technicals that we're going to get into as well. The company is building momentum in its recovery, but its comeback could easily be derailed by macroeconomic factors, and getting to consistent free cash flow generation won't be easy. So the macro environment deals with, say, a recession. However, it's clear that there is an upside for the stock, and the company does have a well-known brand in a massive market. If it can translate that into profits, the stock is sure to respond. Now, I did a short on Carvana, I don't know, 2 months ago, and I said if they can get through a couple of issues, it was a buy. All right, so let's go to the stock. And as you can see, the stock is up roughly 500% this year, but it's still down. Wow. It is still down 90+%, right? And it even went below its IPO price back in April of 2017. All right. So this is the monthly chart. We have roughly 5 trading days left before this candle closes. And what would be a great sign is if this candle can close green above the $20 level. Price currently right now, that's at 22.02. That would be a great sign for the bulls. Now let's go to the weekly chart, and you can see how price formed this accumulation phase. And this is that level that I was talking about on the monthly chart. Again, if price can close next week above the 20, again, a great sign. You can see we have some sellers that came into the market the last couple of weeks. All right, but that makes sense too, right? So you got a couple things going on. This huge leg up, you got profit takers taking some profits off the table. Price action doesn't always go up in a straight line. It goes up and down, ebbs and flows, right? So this is normal. However, again, $20 will be key. That was resistance, support, which is now hopefully going to serve as support moving forward. Now, before I tell you how I missed out on the great opportunity, let's go to the daily chart, and this was the level that I was looking at to go long. We had a surge in volume. Price could not get to the zone. It failed 2 other times and then just took off. Now, scrolling out to the weekly chart, it was staring at me in my face. I missed it. I don't know how. I would have went long on a pullback. I don't know how I missed this. Don't really know. But beauty of Wall Street, there's always opportunities. But here's a weekly buyer's level that I missed for whatever reason. Let's analyze it. So you have the surge on the weekly candle, a basing candle, and then a leg out. So leg in, basing candle, leg out. That's the pattern. They call it the rally base rally pullback. That was probably a 88.6% retracement. Let's just see for giggles. Look at that. 88.6% retracement. This is a Wall Street favorite. 88.6% retracement. Don't know how I missed that. Nevertheless, I agree with the article. It is a hold. We need to see the monthly candle close above this $20 level. I don't know, folks. Let me know what you think. Is Carvana going higher, lower? Are you in? Do you want to get in? Leave me a comment. Thanks for watching. Subscribe. Please like the video.